It's being referred to as the 2023 banking collapse. Over the weekend, we saw the failure of Silicon Valley Bank. We've got to go back to the financial crisis to see a time when a larger bank failed. So it's obviously sent ripples through financial markets, or shockwaves is perhaps a bit more accurate. So I thought, let's do a video, let's catch up. What went wrong with Silicon Valley Bank? How is it affecting the banking sector? What's the bigger impact in broader financial markets? And does this signify the start of a much bigger sell-off for stocks across the board? Before we get into it, let's do a quick tour around the charts. Then we'll come back and talk about it a bit more. So here's the rise and fall and ultimately the fail of SVB Financial. The stock back in March 2020, so 3 years ago, was trading around 140. As the Nasdaq and the tech sector boomed, got up to 760 in November 2021. Then, of course, if we zoom in, it had been sliding since November 2021, and then comes crashing down and doesn't trade anymore following last Thursday's close. Some of the fallout for the other banks. This was one of the bigger fallers, First Republic Bank. So if we went back to the beginning of last week, was trading around 120, 122, closed on Monday of this week around $30. It's jumped up. It's trading at 49 at the time of recording today. But again, you can see a massive slide in that stock price too. If we take a look at an ETF that tracks the market, this is the Vanguard Financials ETF. So if we go back to just over a month ago, middle of February, was trading at 90. It did trade as low as 75 yesterday, so not surprisingly, quite a bit of volatility in that. And finally, the S&P, the broader market index, has been under pressure for the last week or so, and at the beginning of this week, traded back to 3,800, which is pretty much the lows for the year, or just above the lows for the year so far. So that 3,800 had been a big level. I think this could be the interesting market, but more about that when we jump back onto the charts in a few minutes. So you can see the impact there on a banking sector ETF. We can see the impact on the broader stock market. But what does it mean? We know that markets can often overreact in both directions to good or bad news. But also, if we go back to the start of the financial crisis back in 2008, 2007, 2008, it did start with some smaller funds getting into trouble. So is there a bigger problem within the banking sector? As usual, in this video, I'll talk through some of the news, then we'll jump back onto the charts and take a look at things in a bit more detail and see where the opportunities might be. We'll look at two markets. We'll take a look at the banking sector, and we'll also take a look at the broader market, the S&P 500. Before we get into that, I should mention that I launched a newsletter a few weeks ago. It comes out every Saturday morning, free of charge. It's a catch up with what's been going on in markets, what market am I watching in the week ahead, what am I trading, and a trading tip in there as well. If you go to my website, jonesthemarkets.com, you can sign up for the newsletter at the bottom of the page. On there, you can also find information on the trading course I run. There are two courses within the course. There's a shorter term, more aggressive trading course, and there's a more medium term approach. You can read all about that and have a look on Trustpilot, read the reviews from people who've been on the course, and it's all on the website. And if you go there, you can sign up for the newsletter. Right, let's get into it and take a look at this failure of Silicon Valley Bank in a bit more detail. So it wasn't really a major bank in the US, if we're looking at the banking sector as a whole. It was the 16th largest bank in the USA. So it wasn't small, but it wasn't perhaps one of the more mainstream names. And it was primarily servicing the tech startup sector. And what went wrong here? Effectively, the bank in the past had taken a bet on rates staying low by buying longer term bonds, so longer term government securities when rates were low. And of course, as rates have increased, as we know, over the last 12 months, the value of those bonds has dropped, and Silicon Valley Bank was in a position where it didn't have enough cash to pay its depositors. And one of the issues here, I think, was it's been pretty widely reported on the industry it's in, the whole tech startup, venture capital business. The rumour mill really started to gather pace. And effectively, at the end of last week, we had an old-fashioned run on the bank where depositors was scrambling to get their cash out. By the close of business on Thursday, some $42 billion had been withdrawn from Silicon Valley Bank. As not surprisingly, lots of these companies thought, well, if my money's not going to be safe, because I think the US banking guarantee only covers the first 250,000, I want to get it out. I want to put it somewhere else. So we saw the bank in a lot of trouble. The US government since then has stepped in to guarantee the deposits of the bank's customers. So that has provided some solace and some calm. Earlier this week, we saw HSBC rescued SVB UK, so the UK business of Silicon Valley Bank, buying it for £1. So, and now I think that the US government is looking to see if it can sell off the main bit, the US bit of SVB. So, but in a business, in financial markets and banking, a business where trust is perhaps even more important than in other industries. When we see this sort of thing happen, it really does send shockwaves across the board. We've seen, for example, another bank, First Republic Bank, dropped, I think, more than 50% earlier this week. Their stock price dropped. We've seen the banking sector as a whole hit. We've had news out today on this side of Atlantic that Credit Suisse is reviewing its financial reporting, as it says that material weaknesses have been found in how it prepares its accounts. So there's understandably a lot of nerves around the banking sector at the moment. And I think that the big question here is, as we have seen interest rates increase, this is what put pressure on Silicon Valley Bank. The value of the bonds it had bought really lost a lot of value. Has this sort of thing gone on at other banks? So have other banks in the past bought bonds when rates were low? So will weaker bond prices have a material impact on other banks? And could this be just the first bank that gets into trouble? We'll see. We'll see what happens as the dust settles over the next few weeks, next few months or so. But I thought for now, for today's video, let's take a look at this banking sector index and take a look at the S&P 500 and see, well, actually, could this be an opportunity, this short-term sell-off so far? Is it actually an opportunity for us as traders? Let's take a look. I thought, first of all, to have a look at a proxy for financials and a way of getting exposure. We take a look at a popular exchange traded fund. These are funds that just try to track the performance of an index. I've got the Vanguard financials here. You can Google it to find out more about it, but seeks to track the performance of a benchmark index that measures the investment returns of stocks in the financial sector. So it's a way of getting exposure to that part of the market. And clearly, as I said at the beginning, we've seen this thing get knocked off the February highs. The February highs were around $90, got knocked down to 75 at the beginning of this week. And at the moment, the market's just opened, is trading just above 78. So pretty volatile, as you'd expect, given what's going on in the world. But I think what will be interesting is what happens when the dust settles. If we take this chart out, obviously with most other sectors, had a great run, the financials, from the COVID lows in March 2020. So this ETF was trading down around 43 and pushed above $100 in the latter part of 2021. It did decline last year, but did stabilize from about the summer of last year. And I think this is perhaps, for me, the interesting level to watch. These lows that we've seen since June and in October, and arguably over the last 24 hours or so, do we see, once again, buyers willing to come back in this zone? The low in October last year was 72.95. So let's say this whole 73 to 76 band, if things do calm down, does this once again prove to be a floor for this financials ETF? I think if it starts trading below that, then the risk is for a much deeper sell-off. So for me, it is all about that 73, 76 area. You can see just on the way up in Feb 2021, so a couple of years ago, 72 had been a slight pause before the market pushed above $100. So let's keep an eye on that whole zone. But if you thought this was going to be focused just on Silicon Valley Bank and we weren't going to see contagion through the rest of the sector, it'll be interesting to see just where this ETF settles and calms down, and perhaps we see a base again ahead of 73. Let's broaden this out now to the wider market. Have a look at the S&P 500. I thought this was interesting. I'm a big fan at looking at big levels in the market. And from October of last year, we have seen the S&P 500, the broader US stock market index, try and stage a recovery. We'd had a succession of higher highs, higher lows. The latest highest high came just over a month ago, beginning of Feb, when we saw the market trade up near 4,200. Of course, it's been knocked back since then and suffered some big falls last week as this news was breaking. But I think for me, it is interesting that it has held above these old lows from back here. 22nd of December low was 37.55. Then this year, 37.87 has been the low. So let's call it 37.50 to 3800 has been good support for the S&P. So again, and I should say I am long the S&P at the moment. So I am positioned for the market to rally. Of course, you've got to make up your own mind. But for me, I do wonder if this is just contained to the banks that have been affected so far. Will we see an element of calm come back into the market? And for me, it is all really about this 37.50, 3800 zone. So if we're going to see the market recover from here, then my target is for a run back up to the highs for the year, the highs from Feb, up around 4200. So it'd be interesting to see how this plays out this week. We'll take a look again in the live stream at the end of this week. I think if we start pushing below 37.50, it looks like this recovery that's been going since October is really in some trouble. And perhaps the risk is we're going to go back and take another look at these October lows, this sort of 3,500, 3,600 zone. But for now, it's only been a couple of days, but it is encouraging that the market has held above the lows for the year so far. Let's see how it turns out. And for those of you who are fans of the RSI, the indicators, I've put a 10-day RSI on. With the market declining so much since early Feb, it's gone oversold. The RSI has gone oversold. It's the first time this 10-day RSI has been oversold on the S&P since those October lows. So again, it's about 6 months ago that we last saw the market this oversold. So I think, again, that would build into the argument for the market perhaps have overreacting to the downside from here and expecting something of a recovery. Let's see what happens. Let's see. I think for me, the important thing is to watch the levels, watch the lows for the year so far, and see if the S&P can use that as a springboard to recover and have a look at those February highs. So that's it so far, based on what we know and what's happened over the last few days. It's going to be really interesting to see what happens with the banking index, the banking ETFs, and the broader S&P 500. To find out more about how to trade these markets in both directions, to find out more about my trading course and the performance over the 3 months when I was publicly trading the approaches I talk about in the course, the account was up just over 50% in 3 months. Go to the website, jonesthemarkets.com, to find out more about this. We'll take a look again at some of these markets in the live stream on Friday, so make sure you're subscribed to not miss out on that. But for now, we'll leave things there. So until the next time, good luck with your trading.